Hey traders, Nick here. Let's see, the 24th, Thursday. The day ended up green. In the morning was a little bit shaky. The point of this video is to basically remind everyone that if you're actively day trading and you're doing it on your own and you don't know charts very well, I think you're putting yourself at a severe disadvantage. And I'll tell you why. So it doesn't matter as much if you're a swing trader and you do your own homework. For example, perfect example, Intel was up big today. In the last couple of weeks, every time somebody asked me, what do you think about Intel? And I said, it's a blind buy under 45. The whole zone, if you look back years, it's been the buy. It bounces off of it. Now, it could fail, but until it fails, my assumption is that it's a better buy than not. So if you bought it, you got the bounce today. And for that, you don't need to know charts very well. All you need to know that it's a good bargain, it's cheap value-wise, it's a good company, it's bigger than NVIDIA and AMD put together twice over, but it doesn't get any respect. In fact, that was my long-term thesis. I said, I want to own shares for the super long term. They will wake up and figure out that this is the beast that everybody should be chasing, not the ones that have the headlines. Now, the other ones are great companies, but this one was underimpressed. The market is underimpressed with it, and they're wrong. They will figure it out. Anyway, that's a perfect example why you don't need charts for that kind of a decision. But if you're actively day trading, and I'm going to go through just two tickers of what we did today. When I say we, everything I say here can be backed up by 250 people plus or minus, because they were watching my screens live while I'm drawing these lines. Okay. So I also have screenshots of how much money they made and how many they nailed. A couple had small losses, but they were able to swing back into profitability by the end of the day. So you can't do that consistently by just being too lucky. I mean, you can be lucky and nail it without knowing charts, but you're at a severe disadvantage. So I'll give you an example. This is Tesla. This is a 30-second chart, which means every two of these is 1 minute. So not everybody has access to these charts. That's why you need to join a group that has that. So here's the scenario. Somewhere around 7:30, 7:38, which is here, Pacific time, I said I had been talking about some positive divergence. So good things in the chart that say price is wrong. Price should be higher. And I said I would chase it via this. And I have screenshots. Like if you click on this one, it'll show you the chart with the ticks ending here. And this is how I drew it. I thought it would happen. And this is how it actually unfolded. They got to my target and they meandered right. Okay, so that was one setup. And then a little bit later, let's say a couple of hours later, a little less, they had a second load on Tesla if they wanted it. And the second entry point was dipping back into the support from which it came. So I also identified somewhere, I said, it's vulnerable. Don't chase it. Book your profits. Somebody said, what about here? I said, if you're not booking your profits, somebody said, I'm leaving runners. I was like, why would you even leave runners? It's too expensive. So if they had 5 calls, they closed 3 and left 2. That's smart. But why not leave 2 and sell calls above them? So you also lock those 2 while you're remaining long. Anyway, convoluted way of saying it was time to get out. And then I underlined saying there's an inverse head and shoulders bearish pattern brewing. 2 triggers. 1 for somebody that trades trend lines. 2 for somebody that trades necklines, which is me. And I said, when I drew these 2 lines, I also drew this box ahead of time. I said, goodbye the dip area here if it gets here. And then this is what I expected to do when it gets there. So if they bought the dip here, they got 1,004, so $5 of rally, and it got halfway and then failed. It ended up taking that out eventually in the end of the day, because the end of the day was fantastic, but not in a straight line. So this was half right for an hour, and then wrong, and then right again. So it depends on where they stopped out, if and when they stopped out. 2 of the people that took that, they didn't stop out, so they ended up okay. Similar situations were with Shopify, I believe, and I'm going to say Amazon, but I don't have time to go there and show you the same thing. But I will go to the IWM, because that was the thing of beauty. So this is the IWM. I'll take out everything. This is the chart today, how it happens. Like, how the hell do you trade this? Red, green, flat, red, and then boom, up 1%, almost 0.7, whatever it ended up. Well, let me show you how we traded it. At least I charted it for them to trade. So this was my alert on IWM that late in the day. I mean, it wasn't like something anyway. So early in the day, I laid it out, and it took its time to develop. So I said, here's the line, and here's the breakout important spot, and the measured move, and my move. So this is the technical move, that the more correct target, and it's still a little bit shy of what it should be. And this is where I think they're going to stutter. Okay, this was posted and shared with 250, actually with more like 600 people, but 250 watching live. And this is the actual price action after the fact. Look at it. This is how the day ended and after market. So look at how it hugged the line exactly. And I didn't draw this ahead of time. Look, you can see it without, you can see it with. Pre, post. So we can do this. It's not boasting. It's to show you that if you're not doing this, your opponent may be doing this. So if you and me are playing this game and you're not using charts, I like my odds. I'm not saying I'm going to beat you every time, but I like my odds. So what do you mean game? Well, if you're buying something, if you're selling that call, I'm buying it, I have an edge because I have these tools and you're choosing to ignore these tools. That's as simple as I can put it. It's not to antagonize the watchers of this video. In fact, to encourage them to... I'm an engineer. I have nothing to do with Wall Street. I figured this stuff out on my own. And I added a couple new tools. I'll put a link in the description for one of the best tools I have for short-term trading. And other than my eyeballs, look, I don't have anything here. I don't have MACD, RSI, volume profile, nothing. All these lines you see drawn by hand because I know the levels. I'm watching levels, eyeballs, and I know extensions, and I know patterns, and then I have the extra tool from TradyTicks. So I'm not a tool guy, but I've recently added that tool in. It does a million things. I'm only concerned with one tiny little thing it does, and that's all I'm doing with it. So I'll put a link down below. That's a tool I would pay for, and that's the only tool I would pay for right now out of everything I use if I wanted to day trade, actively day trade. It does a million other things, so pick at it if you want to. The link down below will give you a 10% discount if you're interested. Don't feel obligated. Really don't care one way or another. But this is how the day unfolds for somebody that's watching charts. If you want to join the chat room, message me in the video and we'll go from there.